Good day, Junior Tickies. I'm Mrs. Brimacombe. We're going to look now at Chapter 10, Activity 5. The information relates to Bruno Traders. The financial year ends 30 April 2023. So what is required of us? Prepare the trading account and the profit and loss account on 30 April 2023. These final accounts is so important that you make sure that you understand them. 5.2, complete the post adjustment and the post-closing trial balance. 5.3, refer to question 5.2, identify the differences between the post-adjustment and the post-closing trial balance. 5.4, why is it important for internal control that the totals of the post-adjustment trial balance and the post-closing trial balance agree? And then lastly, explain how amounts in the post-closing trial balance can easily be checked by matching column A with the description in column B. Write only the correct letter next to the question number. So you are provided with the pre-adjustment trial balance and 10 adjustments that must be completed. We are first going to look at completing the final accounts, and then we're going to use our workings, our T accounts, to complete the post-adjustment trial balance and the post-closing trial balance. So starting with the trading account and the profit and loss account. Everything you should know by now in the nominal account section will go to the trading account or the profit and loss account, because the nominal account section is all my income and all my expenses. Debtors allowances is always closed off to sales. That is your first closing transfer. Then sales is closed off to the trading account. Then cost of sales is closed off to the trading account. And now we can complete. All our income will always appear on the credit side and all our expenses will appear on the debit side. Make sure that you show your calculations in brackets. So now, once I've shown this in brackets, I actually do not need to refer back to the pre-adjustment trial balance with the figures in the nominal account section, because everything is written here for me. We can start now by looking at the first adjustment. Depreciation must be calculated as follows. Vehicles at 15% per annum according to the fixed installment method. A new vehicle was purchased on credit on 1 February 2023 for $280,000 and it was recorded. Equipment at 10% per annum according to the diminishing balance method. Reminder, depreciation can be either calculated using the fixed installment or straight line method, which means we need to use the cost. And when we're looking at the diminishing balance method, we need to get the book value. To get the book value, it's your cost minus the accumulate. So first, let's have a look at vehicles. And again, same advice as before. Always start with your movement. A new vehicle was purchased and it cost $280,000. This was recorded, which means the balance from the pre-adjustment trial balance is after we've purchased the new vehicle. So to calculate the old or the remaining, we need to take $900,000 minus the $280,000. It's so important that you get this right, because otherwise you're going to calculate your depreciation incorrectly. If I look at my timeline, to calculate on the new, if it was purchased on the 1st of February, it means from the day we purchase it until the end of the accounting period, which is equivalent to 3 months. So 280,000 times 15% times 3 divided by 12. On the old, we need to use the cost, which is 620,000 times 15% equals 93,000. My total depreciation is the new plus the old. And to show this, depreciation is an expense which will be debited. Accumulated depreciation on vehicles is a negative asset, so this will be added to the figure from the pre-adjustment trial balance. Depreciation in brackets, I'm going to show 103,500. But we are not done because we still need to calculate depreciation on equipment. Using diminishing balance method means we need to get the book value, which is the cost, minus accumulate, and then we can times that by 10%. To show the depreciation on equipment, depreciation is debited, account credited, accumulated depreciation on equipment. Now we can add that to the depreciation 103,500, and this will be the total for this accounting period. Adjustment number 2, advertising include 4,500. This amount is for an advertisement placed in the local newspaper for 3 months starting on 1 April 2023. Be careful. Don't just assume it's for 12 months. It says for 3 months. So how many months should be taken out? And why do I say taken out? We took this out on the 1st of April 2023, which is basically the last month of the accounting period. And we took it out for 3 months, which means April, May, and June, which means 2 months must be taken out. Don't use the figure from the pre-adjustment trial balance, because included into that figure in advertisement is 4,500. So that we need to take times 2 divided by 3. And to take it out, it means advertisement must be credited and account debited will be prepaid expense. So my advertising, we're simply going to say minus 3,000. Adjustment number 3. An account of M. Claassen, a debtor, is 4 months overdue. He owes the business 5,200. The business charged him an interest of 6% per annum for 4 months, and the amount was not recorded. Step number 1, calculate the interest that should be added. Make sure that you say 5,200 times 6% times 4 divided by 12. We tend to forget to say that. And then we only say 5,200 times 6%. That means you've charged this debtor for 12 months because it's 6% per annum. Make sure that you show it was charged for only 4 months. So we have to say 4 divided by 12. 2 accounts involved is interest on overdue debtors account, which is regarded as an income, and debtors control, which is regarded as an asset. The interest on overdue account is going to be credited, debtors control debited. That balance from the pre-adjustment trial balance is going to increase because we've charged this debtor interest. Interest on interest on overdue account is an income. That's why it appears on the credit side. Adjustment number 4. The business built an extra parking lot which contains solar panels for 120,000 and repaired the old parking lot for 19,400 during the financial year. However, it was discovered that the total amount of 139,400 was debited to the account of land and buildings. Correct the error. So if I'm looking at what happened with land and buildings, there was an addition of 120,000 and then there was repairs. But that repairs 19,400 was incorrectly debited to the land and buildings because they said the entire amount has been debited to the land and buildings. So what must be taken out is only the 19,400 where to repairs, and my expense account from the pre-adjustment trial balance is fuel and repairs. So we need to add that to our expense. That's why we're going to simply say plus 19,400. Adjustment number 5. On 25th April, S. Harper paid his debt, $780, which was overdue for a long time. This amount was entered in the cash receipts journal in the debtors control column. It appeared, however, that Harper's account had previously been written off. So if we're looking at what has been done correctly, yes, the business received money, so it should go into the cash receipts journal. But what was done incorrectly is we've shown that the debtor made a payment of $780. This person is no longer a debtor, which means that we need to take that out so that bad debts recovered can be credited, which is regarded as an income. And that's why it appears in my profit and loss account on the credit side. Please make sure that you understand debtors control. We're taking it out, but what effect will that have on the balance? Keep that in mind when we're doing the post-adjustment trial balance. Adjustment number 6. One part-time employee was owed wages of $1,200 for the last week in April. However, with the owner's permission, he had taken trading stock at a cost of $750. The difference will be settled by the business in May 2023, which is outside of our accounting period. So to break this down, where do we start? An employee was omitted, which means we need to add it to the salaries and wages account. And whatever we owe our employee goes to creditors for salaries and wages. $1,200 was left out. We still owe that to our employee, which means my salaries and wages is debited. Our expense will increase. Creditors for salaries and wages is going to be credited. That money will only be paid in May. But now, this employee, with the owner's permission, could take trading stock, which means that we need to show our trading stock decreased and the cost was $750. Account credited, trading stock. Account debited, creditors for salaries and wages. If I now take the credit side minus the debit side, it will show that the amount actually owed to this employee after they've taken the trading stock for personal use would be $450. The only thing that goes into my profit and loss account is that I will need to add $1,200. Please do not make that mistake by showing the $450. We need to show what was our expense, the gross, how much was owed to this employee. Adjustment number 7. Trading stock was damaged due to a leak in the roof. The cost of the stock damage was $26,000. The insurance company agreed to cover 85% of the damage. This amount is receivable during May. Again, May 2023 is outside of our accounting period. So when we're looking at this adjustment, we always need to show the original cost of the stock which we've lost. That means that our trading stock is going to be credited with $26,000 and loss due to leak is going to be debited with $26,000. The insurance company agreed to pay out 85%, which means $26,000 times 85% accrued income is going to be debited because that money is owed to us. For every debit, there's a credit. If I now balance this account, which is closed off to the profit and loss account, it will show that our actual expense will only be $3,900 because the insurance company is going to cover $22,100 of the $26,000 which was damaged. Do not show this as insurance. It doesn't have anything to do with the insurance expense account. That is when I pay my insurance monthly, I'm going to add it to the expense insurance. When something like this happens, where there's damage, I can claim from my insurance and they're going to pay me out the money. If I look at loss due to leak in my profit and loss account, I could have simply also said, well, 100 is the total original amount of the stock which we've lost, minus 85% means that 15% will be an actual loss. And take note, we get exactly the same answer. Adjustment number 8. The trading stock account reflects a deficit of 4,700 after the physical stock take was done. So there's no calculation involved here. They provided you with the figure by saying to you, there's a trading stock deficit of 4,700, which means the trading stock account is going to be credited. Trading stock deficit is an expense which will appear on the debit side in the profit and loss account. Adjustment number 9. The loan statement from Standard Bank on 30 April 2023 reflects the following. Balance, 1st of May 2022, 384,000. Total repayments during the year, 10,000 per month. Interest is capitalized and there's a question mark. Then the balance on 30 April 2023 is 300,000. Now take note. In the pre-adjustment trial balance, it says 264,000. Now what does that mean? How do I calculate the interest now? We first start with 10,000 per month, means over 12 months, we've paid 120,000. A quick and easy way to solve this is by doing a T account. Now, if you look there, 384,000 minus 120,000 equals 264,000, which is in the pre-adjustment trial balance. So what have they not yet added was the interest. But how do I find the interest? We start the balance in the beginning. The total repayments was 120,000. The balance at the end is 300,000. The balancing figure now becomes the interest on loan, take the debit side minus the credit side. My interest on loan, which is an expense, is 36,000. And because it's an expense, it will go on the debit side in the profit and loss account. So an easy solution to this is do a T account. Write down the information which was given. Find the missing figures. Adjustment number 10. The fixed deposit was invested on 1 November 2022 at 9% per annum. Provide for interest. Interest is capitalized. Be careful with this again. So we've got the figures from the pre-adjustment trial balance. If I'm looking at my timeline, my accounting period ends 30 April, but it starts the 1st of May. We've invested on the 1st of November 2022. So interest cannot be calculated for 12 months if I've only invested on the 1st of November 2022. Interest must be calculated for 6 months. We've invested 200,000 times 9% times 6 divided by 12, which means that my interest for this accounting period is supposed to be 9,000. But from the pre-adjustment trial balance, we have a total brought forward of 8,250. So if my interest is supposed to be 9,000, it means that 750 is still outstanding. And because interest is capitalized, this will be added to the fixed deposit account. So on the credit side, because it's an income, I'm going to say my interest is supposed to be 9,000. The difference, that 750, means it is still outstanding. Once we have done all the adjustments, we're again going to do the same as we've done before. The next step is close all the brackets. So starting with sales, then cost of sales, take the credit side minus the debit side. The balancing figure is the gross profit, which must be taken to the profit and loss account. Now I can close all my other brackets and total. Make sure that you check, does the credit side exceed the debit side, or does the debit side exceed the credit side? If the credit side is more than the debit side, we made a profit. But if my debit side is more than the credit side, it means that we've made a loss. So if I just quickly scan through the figures, it's clear by just looking even at that figure that the credit side is more than the debit side. So I'm going to start adding up on the credit side minus everything on the debit side, which means the net profit, which is taken to the capital account. This is the balancing figure. Moving on to the post-adjustment and the post-closing trial balance. Now, I know this might be a little bit small, so please have your memo with you. This is so that you can understand the steps in completing this. So when we've got only, forget about now the final accounts that we've just completed. When we've only got this to complete, the post-adjustment and the post-closing trial balance, we start with the figures from the pre-adjustment trial balance, and we're going to write it in brackets. You need to show your calculations in brackets. Now, step number 2, we're going to look at all the adjustments. Now, we've already gone through the adjustments, so I'm only going to look at the T account so that you can see what am I supposed to be doing. If we look at the vehicles, do not add the 280,000. It says a new vehicle was purchased and it has been recorded. So my vehicles is going to stay 900,000. What is the difference? Is my depreciation that was calculated. This means that depreciation will be added to the accumulated depreciation account. So we need to take 180,000 plus 103,500 equals. With equipment, we need to take the figure from the pre-adjustment trial balance, 42,000 plus 4,800. I just don't have enough space to write it in there. And that is the total for the accumulated depreciation on equipment. Depreciation is an expense which will go to the nominal account section. Adjustment number 2, we had advertisement and prepaid expense. Advertisement, we need to say minus 3,000, and prepaid expense will now need to be included in the balance sheet account section. Adjustment number 3, interest on overdue account, must be added to the nominal account section, and debtors control, and that's why it's so important. If you're not sure, do a T account. We had to take it with debtors control, we had to add 104 because interest was charged on an overdue account, so plus 104. Adjustment number 4, land and buildings were incorrectly debited with the total amount, 139,400. Only 19,400 must be taken out, so minus 19,400 equals, and then with repairs and maintenance, we need to add, with fuel and repairs, we need to add 19,400. This is the figure after we've made the changes. Adjustment number 5, we had bad debts recovered, and very importantly, that was taken out, but it has a positive effect. That's why plus 780. Now we can calculate the total for debtors control, and we need to include bad debt recovered. Adjustment number 6, salaries and wages. We had it to add to our expense 1,200, and now we need to add creditors for salaries in the pre-adjustment trial, in the post-adjustment trial balance under the balance sheet account section, 1,200. Trading stock, 750 was taken, which means minus 750. And what's happening with creditors control? not creditors control, creditors for salaries and wages, minus 750. That is the amount that we owe our employee, 450. Adjustment number 7, loss due to a leak, trading stock, minus 26,000, because that was the original cost of the stock that we've lost. Accrued income, we're going to add 22,100, and then loss due to leak, 3,900. That was the amount that appeared in your profit and loss account. Adjustment number 8, trading stock deficit, should be added to the nominal account section, and then they provided to us the deficit, which means our trading stock must be minus 4,700. So we actually need to calculate the balance that will appear in the post-adjustment trial balance. 73,550. Make sure that you show your calculations in brackets. There were a lot of movement with regards to the trading stock. Adjustment number 9, the loan. Interest on loan, we needed to calculate. Our interest is 36,000. Take note, with loan, we would have had, where is it now? We would have had from the pre-adjustment trial balance 264,000. What do we need to add to that? The interest on loan, which is 36,000. So the balance at the end is 300,000, which was the statement that we've received from the bank. Adjustment number 10, the fixed deposit. The interest on fixed deposit is added to the fixed deposit account because interest is capitalized. 750 was still outstanding because we calculated our interest for the year is supposed to be 9,000. It means that 750 must be added to the fixed deposit. After we've now done all the adjustments, we're simply going to close the brackets and we're going to add the final figures. Once we're done with that, the debit side should be equal to the credit side. If it's not the same, it means somewhere along the line you've made a mistake. What goes into the post-closing trial balance? This is very important to understand the difference. Nominal account section is closed off. We've calculated that we've made a net profit. Drawings is closed off to capital. So this means that in my post-closing trial balance, I'm not going to have a nominal account section and I'm not going to have drawings. So we start with capital. Drawings, which is 80,000, is closed off to capital. And what do we need to add? The net profit. Now this was calculated in your profit and loss account. How do we calculate it from here? Is by simply taking our income minus our expenses. And that will then be the net profit which is added. This will then be my final figure. Take note, why is there a difference? Because drawings was closed off and the net profit was added. Drawings, there's not going to be anything else. Basically now, with the rest of it, land and buildings up to accrued income, the figures will be exactly the same. Now we can take the debit side and we need to add everything in the debit side and everything on the credit side. If the figures are not the same, it means that somewhere you have made a mistake. If I look at 5.3, it says now, refer to question 5.2 and identify the differences between the post-adjustment and the post-closing. So this is exactly what I've just mentioned now. If we look at the post-adjustment trial balance, it's drawn up after all the adjustments have been considered, it consists out of the balance sheet account section and the nominal account section. But if I look at the post-closing trial balance, it's no nominal account section, no drawings, because this would have been closed off to capital. It's so important that you understand the difference. 5.4. Why is it important for internal control that the totals of the post-adjustment trial balance and the post-closing trial balance agree? To see if we have applied the double entry principle. Have we done everything correctly? Because if it doesn't balance, it means we made a mistake. Question 5.5. Explain how the amounts in the post-closing trial balances can be easily checked by matching column A with the description in column B. Write only the correct letter. So if we look at fixed assets, that is number D. Check that the fixed asset register and the physical inspection. 5.5.2, trading stock, number F. Check the evidence of physical count and stock records. 5.5.3, creditors control, number A. Check the creditors list from the creditors ledger. Debtors control, 5.5.4, number E. Check the debtors list from the debtors ledger. 5.5.5, loan from bank. Number B, check the loan statement. 5.5.6, financial assets. Number C, check the statement from financial institutions. Similar to activity 4. If you are not sure of any of the calculations that we've done, any of the adjustments, you can refer to all the workings that we've done from adjustment number 1. We've got up to adjustment number 10. This concludes now chapter 10, where our focus was on the closing transfers. But what have we included with this is adjustments. Adjustment is a new component or new element or whatever you want to say. It's new for grade 12 learners. It's new for grade 10 learners. So make sure that you practice. In our next chapter, we are going to look at financial statements and financial indicators. I want to leave you with this quote. Think big, trust yourself, and make it happen. Have a wonderful day.